Hey, Doc here from North America. Good morning, good afternoon, and good evening. Just looking at the markets and got lost. My mind just drifted into watching the whole adventure as it always is. Yesterday it was Fed Day. It's one of those exciting days where we have Fed Day, and the Fed was accommodating to us, and I was kind of impressed actually. Mr. Powell made more sense yesterday than he had made in, I don't know, years. I mean, all combined together of everything he says. He was very precise, very clear, very deliberate. He has a certain level of legitimacy when it comes to basically saying, he's lost a lot of legitimacy. Start off with, he's lost a lot of credibility by being tied to this transitory story for too long. It was okay for him to say it for the first few months that he said it, trying to get a grip and understand the advanced level of inflation was developing, but to take it all the way up until November to December of the last year itself, in other words, 5 months ago, or in this case, April just ended. We're in May now. That's 4 months. So for 4 or 5 months, he should not have been saying these things. And he should have, in other words, he should have been basically telling us back in September or August of last year when it was really clear that inflation was picking up. And so that really had hurt his case. Now, yesterday, he made very clear, precise statements that gave confidence to the market that we weren't going to see this level of irresponsibility anymore. I think that was part of it. I liked how he said that he was, they were going to do half a point increases, not 3/4, because over the next couple of months to get a feel how it affects the economy. That's what he's supposed to do. Obviously, we all sit here thinking that they have a plan, and that plan is from deeper information than we as traders and as news readers and as people who have experience or no experience in the marketplace believe that they have information we cannot see. And that's how he lost that credibility by last September or August of last year, when he was still trying to tell us that there is a transitory inflation, when we all saw inflation kicking up. We saw it jump from 1.5% to about 3.5% to 5%, and he kept on saying all the way to November, at the end of November, not at the beginning of it, that it was transitory still. And he finally stopped saying that. And that's where the credibility part fell apart for a lot of us. And so yesterday, to have him actually not give us a guess, but a specific, and that was a more positive thing, because we all know they do see data we don't see. They see it way ahead of us because they have their hands on the levers and control of the system. So they can see every effect that's going on. They know months ahead, at least 6 weeks to 3 months ahead of time, what's going on ahead of us. And so overall that was yesterday was a very positive thing. I don't think it was fleeting. I think it's more of a dead cat bounce, but it was just nice to see the Fed act responsible. And at the same time confirm that they will be raising rates and watching simultaneously the effects of it. And that's what basically last August, September screamed at us, is that aren't they watching their numbers? We can see them. If we can see them, what are they seeing? And that was really the problem right there. That was really, really the problem. And that's how we kind of like lost a level of confidence. I can put up with a Fed chair trying not to share every effect. Hey George, how you doing? But hey Robin, I can understand that part with no problem at all, but I can't accept a Fed acting like as if it's lost and not competent in what it's seeing. That's what I can't. That's what we all can't, especially on the professional side or the experience side of the marketplace. That doesn't play very well at all. You can get away with it for one meeting, but not 5 meetings. That makes it. We call that scratching our heads in confusion, and then we start to doubt that they're making decisions through fundamental. As much as we talk here about how fundamentals have disappeared, they see all the fundamentals and they're altering the fundamentals because they are what. And I guess what we can expand on this just a little bit more, and then we'll get into the charts, is that they are the fundamentals. In other words, they increase money supply or decrease money supply. They tell banks how much they can lend and how much they can't lend, and the quality of lending. And that buyer of last resort, to them, when the markets are going down, and if they don't want them to go down, they can step up and buy. We don't have to wait for the mutual funds or the institutions or the hedge funds or the retirement funds to step up and buy when they think it's undervalued. The Fed can step up and buy whenever it thinks that it needs to. And so they're the ones that have altered the fundamentals. Because we've talked about this since 2008, going into 2009. We've talked about how we see buying when there's no logic to the fundamentals for buying. And that's when I knew it was the Fed Reserve. Robin and I, back in when was that the big crash, Robin? What was it, 1985? I think now. 87 crash, that's it, 87. We saw then Mr. Greenspan tell the chairman of the Chicago Mercantile Exchange and all the other exchanges and the New York Stock Exchange, back then it was Fallon, who was chairman, I think, at that point, and told everybody that if he had to, he was going to go in and buy futures contracts to perk up the market. And so that was very, very clarifying to us then in 1987 that they were willing to go that far. So here you fast forward, we're in 2008, going into the election, the financial markets collapse from the crazy rules and regulations that Barney Frank and all these other, very, I guess you would call them Bernie Sanders types, socialists, and saw Barney Frank actually crying to Marie Bartiromo that day during the collapse in 2008 of the financial system. And that's what created quantitative easing at that point. So anyhow, we know that they do this. We know it's a fact. And when they walk around pretending that they don't, it's not very good for the confidence of the markets. And we'll just leave it at that. 54, what's happening? He was late raising rates, yep. And now he will tighten when prices start to fall and the economy is slowing. So he is wrong twice. You're right about that. And he's probably even wrong even more than that, since we here have been whining about inflation. I think you can go back to even July and June of last year. I was complaining that they're not. I remember making jokes about transitory. I probably labeled a webinar or two about transitory. Transitory is going to turn into, real inflation. I think I did that back literally in July or June of 2021. So, yep, you can increase that twice. I'd say he's been wrong for every meeting up until December, when he did not remove that crazy expression. Matter of fact, yesterday he said no. He didn't say a word about transitory anymore. Nothing, zero. and that's the most important thing of all is that taste of reality. We like reality in trading, and that's the most important thing of all is actually when you know that the source has the data and they say odd and foolish things. That really makes lack of confidence in the marketplace itself, and that forces obviously the Fed to do more balance sheet buying, and he made. I thought it was another thing too. He made very clear. He's going to allow liquidations to be much smaller than the market anticipated. In other words, he said he was going to get rid of $1 trillion each year now, or at least that was the opinion that the market, the market players and traders were looking at. They thought that he would remove $1 trillion each year of the balance sheet. Instead, he's talking about what did he do? He talked about in billions. So he talked about $500 billion at best a year, maybe something like that, even less. And they're not going to touch mortgage-backed securities. They're just going to go after government bonds. So government bonds will go up in price, and we already see them. They're already priced at 3%. And so maybe they get up to, we're thinking, I mentioned this yesterday before the Fed news, we're thinking mortgage rates will probably drift to the 6% area maybe, 5.5%, 6%. They're already in some places 4%, some are in 5% already. So markets, that's why they call them bond vigilantes. Doc, your gold plan working very well for me. Great job, thanks. Yes, also I was wrong on the number, $600. I mentioned it on Monday. I got in the car on Friday. I was driving somewhere to pick up something after I got done the webinar. And after I did my trading, jumped in the car about an hour later, and I'm driving, and the first thing I thought to myself is, wait a minute, how did I come up with $9,400? It's not $9,400. It's $4,400. So it's a $600 risk at most to make $4,400 at best. And it's still a good 7-to-1, but I know, and then I thought, and I mentioned it on Monday's webinar. I was thinking, also you could have done a 2000 instead of a 1950 call. You could do like a 2053. That was probably priced at around $300 for the $4,400. So, but that's good. 54. Either way, it's a good strategy, and it is a good strategy. And it's a way, binary concepts, spreads, trapezoids, all these things we call in geometrical forms. We call it's like a bull spread. It's buying one call, selling another call, or buying one put, selling another put. That's a binary. And so what you can do is you can create them like a sandwich of, so in other words, you buy a call that's more valuable, sell a call that's less valuable. That's a binary. Then you can turn around and reverse that. Then you sell a call above that cheaper call, and then buy even a cheaper call above that. So you go buy, sell, buy of 4 different prices, and that's called a trapezoid. We call that a trapezoid. Just from the geometric form of it. It's just easier. Or sometimes you have butterflies, because they look like a line drawn down and the center is fat, so it looks like a butterfly. We try all kinds of different ways of describing things. It makes it easier in a room of 500 and 600 traders, or 1,000 traders screaming, or 3,000 traders screaming in a giant room. So you try to use all these shorthanded type of messages to clarify what you're talking about. It's just part of the structure of them all. Let's see. So that is the the whole gig of it all. That is it. Anyhow, so where are we at, traders? Let's see. What do we need to talk about now? Oh yes. So let's look at the currencies themselves and the commodities and so forth, and we'll see how they go. So there it is. There's the Swiss right there. The dollar Swiss pairs trade still looking pretty firm here. You can see our work trying to roll over here on J4X and doing a fairly well job, but the hinky Ashkies at the same time are keeping us safe, saying no, 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 don't sell it, don't sell it, don't sell it, don't sell it. And then you can see over here on our work here, the Chicago quant stuff. We'll just exemplify it a little bit more, giving you a this has a higher accuracy than the J4X, but the J4X is free and it's one of the best combinations you can get, trying to trade the markets with free information. Now here you see they're trying to make more highs again here in the Swiss, and we have a hard time accepting that there's something wrong with the Swiss economy. So this move away from the dollar obviously is a combination of inflation and the rates going up in the United States. They're the best. They're probably the highest, most protective rates, I guess you could say. In other words, guaranteed to get your money back when you want them. When you want your money, you get it back. That's probably why you have the Japanese having over $1 trillion of bonds, and the Chinese having $1 trillion worth of bonds, and even the Russians had $600 billion worth of American bonds. They don't put them here because they like us. They put them here because they know that they're going to get it back. That's what it comes down to, and that's the most important thing for all traders, is that they want their equity back when they want it back. That's just part of the game there. The whole idea is to be able to retrieve your money when you need it. That's the whole shebang. So anyhow, what do we got going on here? Okay, so that is that. Okay, so now what we do is we look at this and we try, in our simple way of looking at things, we try to understand what this is all about. There's one thing for sure. I have no doubt that the Swiss economy is not falling on its back and going bankrupt. And then you can see how this thing just keeps on marching up and away, out of nowhere. And that's pretty much where the inflation right here, and unfortunately, the war started too. So this is a flight to safety, and they feel on some level that obviously being invested in America right now might be the smartest place to be because of the guarantee of retrieving their equity. That's the answer to it all in the end. And so then at the same time, you have what's that? Thursday. Oh, what do we got here? On Thursday, the Czech National Bank surprised the markets by hiking interest rates by 3/4. And the event caused an immediate spike of the value of the krona there in the Czech Republic there. Cool. So that is, and we're going to get that now. They're going to try to bring them up, and I would assume that will smooth some things out. But I think that it's kind of a flight to safety, militarily safety. When you have Mr. Putin doing what Mr. Putin is doing, literally bombing the largest country in Europe, that really brings it home. It's one thing when they do it to Chechnya or Azerbaijan or, Syria, out of mind, out of sight, or is it out of sight, out of mind? It's one of those expressions. But when they do it in the dead center of the second largest economy in the world, and that is, Europe, they're a $21 trillion economy when you put all the countries together. And they have a floating currency, so we know that's a relatively clear, value. Whereas, the other countries that don't have floating values try to tell us that their economy is 14 or 15 trillion and they're the second largest in the world. You have to scratch your head and say, yeah, but what if you devalue your currency by only 15%? 15%. What's that make your GDP now? And there's silence, you get crickets, that type of thing. So yeah, that's what this is all about right now. This is a flight to safety because of the military action, and at the same time, we have inflation thrown right on top of it very clearly now. Because at this point, right in here, this is where they made it very clear that inflation had jumped to 8.5%. So not only do we have bombing going on since in this dead center of Europe, Ukraine is the largest country in Europe. So, there's a lot to try to understand. That's without a doubt. There is a lot we're trying to understand out of this whole thing. All right. From there, we'll go over to the second largest economy, and that is the European Union. So let's take a look at that currency right there. And right there, you can see that the thing has been moving down, and again, a combination of probably inflation and the military situation. Those two things have this whole situation jumping. Now you can see here it has bottomed, but we were red. Now the last 2 days, you can see right there, it's showing support there, and you'll see it on Chicago Quant right there, where it popped up for a couple of days. We're in a daily buy from right here, so this is the third day in a buy. Let's put that in there like that. I keep on putting that green line in there, and it disappears on us. I got to save it. File, save. And you can see today it is moving back down again. Just the price is down. This will start to show on J4X in a little while. And remember, this is a daily, so it lags by a couple hours. Again, that's why it's about 67 to 68 on average. Maybe sometimes it jumps to 70, 71, accurate to our math, but we are 30% ahead of it, pretty much 9 out of 10 times. So that's why we follow both. This way you can see the most accurate thing we know of on the planet, and that's this chart right here. And then this chart here emulates a good amount of it with the Hinky Ashkeys playing the dot position. And, you can see the line here moving up, just like our line moved up right there. And that's how they work together. This way we're able to see, you can have a free tool here. And I think we played with this on Monday, was it? Where we were running 2-minute ones and 3-minute charts and 5-minute charts of this. And it's even more accurate, obviously, in a very short-term basis versus a longer term. And if you go spatial, in other words, you make your bars not minutes or seconds or hours, but you make them ticks or contracts, it's even more accurate. So that helps out also at the same time. Okay, from there we go over to one of the larger economies of the world, and that is Great Britain, part of the Commonwealth of over 2 billion people, with an income of about 20% higher than China. So that means something. 2 billion people and an income of over 20% higher. So I'm not sure why the news media doesn't just want to just hug and kiss the Commonwealth as a place to invest. Very confusing to me. And it doesn't make any sense to me, actually. And you can see right here, let's put it up on J4, Chicago Quant. There it is right there. You see they're taking her down again. We did slide into the buy there 2 days ago. And no, let's bring that down too. Remove. We can remove that one too and fix it. Remove that. There was the sell right there. Then we went into the buy right there. Let's put the buy in. And we'll do a save. And a color change. And let's widen that out so you can see it a little bit better, like so. Let's go File, Save, Workspace. There we go. And so you can see today, they're raising rates, but obviously that's not helping anything. Again, curious. And we're in that weekly sell for a couple weeks, just like over here in the euro. We've been in a weekly sell there, all the way back to, where is it at? Right there. Since early February. The pressure has been on that. And so cable, wow, look at that swing on the Hinky Ashke bar. It's really wild. Let's check that out. Right there. And you can see the green line is trying to turn down, just like our green line is turning down. And you can see we are in a red. It's in a red, so that's good. And it was in a green yesterday, like ours was in a green. And then the day before that, we were just in a buy with no dot. And that's how they work. And obviously, the shorter term you use the J4X, the better. It'll be more accurate with this particular system, which I owe Janos a explanation still. Darn it, I keep on forgetting that. Let's see. From there, we move over to the Turkish Lira. Let's see what the Turkish Lira is up to this morning. We'll take a look at dollar Turkish Lira real quick. See, it's been moving down, which is pretty cool because that Turkish Lira has been trading the top end of the range there very stably, I want to say, very stable. And I want to give kudos again. Now you can see here it's trying to turn up. It went into the sell yesterday, and we are flirting with the buy. We're still minus, though, but it is at the top end of that range right here. There's the top end of the range. If we tighten it up a little bit, you see the range. There's the range. Weekly started to really roll over. We were much lower yesterday. Today's Thursday, so we still have one more day to see if it'll break down. And then let's take a look at what I like to say location, 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 and that is Euro Turkish Lira. You see that's trapped inside the range, banging along the 0.618 of that range. If we tighten it up a little bit more like that, it'll show us in a few seconds here. I think it was going to show us. Let's do this. There we are. And then widen out. Okay, and then we go tighten it. You'll be able to see the range. There it is. And it's been hanging out inside its range. And at the same time, it's slid in. Where's that red line? I had the red line in there yesterday. There's the red line. We went into a weekly sell last week. Or a pink line for the weekly. So we went into the weekly sell last week. Now we'll widen out, like so. We were in a daily sell from there. You see the pressure on it. Went into the daily buy right there, so it's keeping you relatively safe for this little teeny weeny little bounce up. And let's see if we need to put the green one in right there. I gave it a volatility day with a red and green dot. Let's see, right there. And that's the buy. Now let's see how long that lasts in that weekly sell. And if they try to roll it over again and start to take it down, that'll be another good trade on the downside. Pablo, hey, how you doing? Can we check out dollar CAD? Most definitely, that's where we head right there. I like that. Dollar CAD. There it is. Kind of interesting. It's been strong, and that's what it's supposed to do because oil is moving up. And that's the most important thing of all is that we love watching how the two work together. The Canadian dollar and oil. They function very nicely. In other words, when the dollar is the Canadian dollar is when the Canadian dollar is gaining value against the American dollar, normally oil is finding a way to go up in value. Let me answer that. Let me just answer this quick text. Just have to answer this really quick. Hang on. There we go. All right, I'm done. If I can spell things right, I'd be even done better. So, Canadian itself, what else can we say about the Canadian? And that is that we see that at the same time, usually when gold goes up in value, that's another one. Gold goes up in value, and again we see the dollar, or in this case the Canadian dollar, gains against the American dollar, and that is really the answer to it all in the end. And that's how that usually plays out. So you can see there, and let's put it up on J4X too at the same time. Right there. 2 days of the red there. You can see the line busting through. And at the same time, let's see, what else can we say about it? I guess best thing is let's take a look at the example. We always do this. We run right over to crude oil, and there it is right there, the spot. You can see it's been going up in value. We've been in that daily buy right there. At the same time, we're in the weekly buy right there. So as long as that's strong, normally we would see Canadian much more stronger against the dollar. It has not been, which is curious because like everything else, everybody's losing against the dollar, but not Canadian the last couple of days. So obviously this move towards the 110 area. I saw, what did I see? I saw Brent up around 110 today trading. Now, jumping over to gold, same situation. Gold trying to lift up in here. You can see they've been putting pressure on it. Yesterday they popped it a little bit, and then today it's really ripping more. And then they played it back down again to the close, which was kind of odd, and then they took it up again. So, I mean, at one point I saw it up 26 yesterday. And you can see today they're making way more higher, a much higher high than yesterday. And we're trying to get into the buy. It's just a minus 0.60 cents at this point. 56 cents right there. 64 cents. You can see where the arrow is. It's right there, just playing around with the green spot there. Minus 72 cents. It's very close to going into the plus, and that day quant will be above the zero line instead of down below it. You can see at the same time we are flirting with the weekly buy. So you can see that competition going on there. So that is the Canadian, and that answered that just as we normally go into it. So, you got 11 more questions, Pablo. It's cheaper by the dozen. They all cost the same amount when you ask a question around here. So you got 11 more questions you're welcome to ask. Anyhow, from there we're going to jump over to the South African Rand. That's what we do. We take a look at the South African Rand like that. And normally we assume this thing should be going down, not up. When gold is making a gain, normally that's what happens. But that currency has its issues. So now here you can see it's moving down, but you can see in actual price it's still on the upside. Let's do it right here like this. You see today it's trading at where is that at? It's trading at 1568. You can see it there too on Dugoscopy. Right there the dollars are 1568. It's moving up. It's plus. You can see it right there, up 1.62%. But when you see strength in gold and you see strength in all the rest, we assume that's going on, and we talked about that yesterday and the day before. Seeing strength in the South African Rand for a couple of days, kind of see where we went into the sell here on was that end of Monday going into Tuesday? No, Tuesday. I guess it was the 3rd. Yeah, Tuesday. So Tuesday it went into the sell. And it has been trying to push down. Now today, it's trying to lift back up again. It's like, whoa, wait a minute here. At the same time, you can see the weekly has been in a weekly buy now for 2 full weeks. This is the 3rd week. How come our line is not in there? Let's find that line again. Got to remember to save these things. So I'm not totally convinced it's going to take off. It's just, and anything is possible. This May 9th thing is going to be, there's talk of Russians instead of doing it in downtown Moscow, they want to do it in Ukraine. They want to have a military march. And I kind of think that, they'll try to be more passive. I don't know what the Ukrainians are going to do. It's going to be very fascinating to see how they play that out. I mean, none. This is very surrealistic. That's the way I look at it. I mean, it is. It's very surrealistic going on here. They're bombing the largest country in Europe, and at the same time, we are seeing all kinds of odd things occurring. So it's definitely something we're not used to seeing. This is not the norm whatsoever. And at the same time, the Russian Federation keeps on rattling the sword of they have nuclear weapons and they know how to use them. Oh joy! So I mean, this is definitely some of the weirder stuff that's ever gone on. Very, very weird, extremely weird, extremely weird. So, all right, and probably that's why we see the currencies all reaching for the dollar. Flight to safety. It reminds me of World War One. I mentioned that in the beginning of one of the webinars about 3 or 4 days ago, where before World War One, there was a real fear that money was going to leave America in 1911, 1912, that type of thing, and because of the policies of Wilson. And then war broke out in Europe, and instead money came to America, and that was a real surprise, supposedly, to the bankers here. I'm not sure, or at least they claim it. I myself, I could understand being fearful of Wilson. I understand that part. He was really taxing the daylights out of everybody. He was a socialist, and I could see them not being comfortable with that, especially with the Bolshevik revolution going on at the same time in their own backyard in Europe. But we really thought here in the States that we were going to lose assets, and instead money came to America during World War One. So, and at the beginning of World War One. So, I guess no matter how ugly it gets around here, and everybody wants to say, the dollar is overpriced, and it's this and it's that, and our inflation is this and that. In the end result, it's obviously the best game in town still, and that's the confusion that I think we all see in the media. They don't know how to interpret that because they're not really happy about looking at history. So, I mean, they don't have any interest in telling you that Woodrow Wilson was a socialist and put the income tax on, and they don't want to say anything about that. Then they don't want to. So then they're not going to talk about it. So now you're not seeing history. They would hide it. So it's a real confusion there a lot of times with the American information or data that you receive from the major news organizations here in the States. They hide a lot of information because they don't want to discuss it. Anyhow, that's where we are. Now from there, over there, let's see, let's take a look at the currency that will not be named. That's the one we look at this point in time. And it's in a sell now for, these dots are really being wild. I think we need to refresh this whole thing. Every time it looks like it's going to go into a sell, it seems to screw it up. Oh. And now we're looking at like 2-year lows. We're at 65 now. This thing is locked to the dollar. As the dollar gets strong, this thing gets strong now, because it's locked to gold and silver and so forth. And so the dollar is locked to gold and silver and so forth. So when you guarantee that you're going to allow arbitrage between your currency and gold and oil, that automatically locks it into being part of the dollar, which is a smart move, really. That's one way to get a strong currency again. So that's the answer to that. Tell us a trade. I need a win, a nice trade. Okay, let's see. What is a good trade right now? I don't know. There's so many good trades. Tell me the products you trade, or the ones you like to trade, and we'll take a look at them and see if there's a good trade in it. That's the best way to do that, because there's so many products out there that I trade, and I don't want to tell you what you need to trade that you may not trade at all. Let's trade something you do trade, and we'll find out if you should be long or short it. How's that? That makes sense to me. So we'll wait and see what you come up with. That's the best of all. I mean, there we are. So, as we're waiting for Pablo to come up with some of the products, throw out like 3 or 4 of the products that you like to watch, you like to trade, and we'll go look at them and find out which one should be long or short, and that'll help you out. All right. From there, we jump over to. And as you can see, also, ever since they locked the currency in, right there. Let's just show you this. Ever since they've locked the currency in an arbitrage with gold and oil, it's following the dollar perfectly, just moving down. Yesterday, the dollar lost a little value. What did it do? It tried to bounce up. Euro. Okay, cool. Here's the euro. Let's move that over. It's in a weekly sell, so you'd really like to trade the downside of it. Right now, it's trying to bounce up. What we'd like to see is this curve underneath. Now, let's do this. Let's go over to J4X and take a look at the euro. Now, we're looking at, multi-year lows, very lows, enormous lows. Let's take a look. Last time this product was down that low. Well, obviously, back in February of 2020, it got relatively close to it, but it's not it. There we are, back in 2016. So maybe what they're going to do is they're going to take out that low. One of the ways would be is to trade the binary. Buy the if you use options or binary options. Buy the 105 put, sell like the 103 put. That would be a way of playing it. Depending on your equity and so forth, being short the spot at the same time, long a call. That's another way of playing that strategy. So we're waiting for it to close in a daily sell though first. It must match the weekly signal. And so we'll keep an eye on that. And obviously, if it got as low as probably this low here of 105.06, maybe that would be a good clean time to step in. In other words, about 40 some odd pips lower. At this point in time, we're waiting to see. Now over on J4X, you can see that's the monthly. Now let's go back to the daily. You can see we are in a green for the last couple of days. So we're waiting for this to turn green. And you can see the green line is trying to roll over just like our line right here is trying to turn over. So there's one right there. If you're hungry to be in a trade real quick, since it's in a weekly sell forever, it seems like. Let's see, how long has it been in that weekly sell now? Let's contract this up. The simplest way would be is to go put a binary on. A binary option spread for, I don't know, like a month and a half, something like that, maybe a month, with time in it. So in other words, it would be at least a 6-week-old spread, and especially around the one. Let me see if I can get some prices for you too. Let's see, where's it at? Right there. Now let's see what. Let's see if we can get that options on that. So this. Let's see. There we go. And we're in what, May now. So let's look at July options. And we'll look at the, doing this right? Yeah, I think we're doing it right. So let's look at like the 104s or something like that. Puts. And let's see what else. And then let's see like the 103 puts. Let's take a look at the 102 puts. See how that goes. There we are. And the 104 puts are trading at. Let's see if we can get price on them. Okay, so they're I just saw it. There's the price. They're trading at 80 pips basically, 77, 78 pips. The other one is trading at 43 pips. So basically you're looking at a 30 some odd pip to make 200 pips. And that would be a good clean strategy if you can't wait for the sell. In other words, you're just so antsy, you just have to get the trade on. And that's not that bad when you do it in options because, it's relatively safe. We're in a weekly sell. You would like to see this in a daily sell before you put a short on. But if you do it in options, at least, you're only risking maybe 10 or 15 pips. You won't get stopped out before we know that it's the wrong place to be or the right place to be. Because, again, we want it to close in both the daily sell and the weekly sell. So that's the best way of describing that. How's that sound to you? All right, well, we'll wait for a response there. And from there, now what's McAfee jumping in on there for? Let's get rid of that. Close. Oh, cool. Yes, that's a good play. Let's see. Option trading is a lot safer when done right than anything else. And marrying options to, there's a lot of different strategies you can use. You can be short the spot, and at the same time you can go with a call spread to protect it on the upside, or calls outright, or binaries, and at the same time, or you can turn it into like a buy right type of thing. You can short the spot and sell a put and take in the premium. That's another play too. It's still by being short the put, when the spot goes in the wrong direction, you make money on the put. And so that's part of the strategy too you can do. Do you have a online session of trading? Talk to Robin. Robin takes care of all that stuff. Say hello to Robin and talk to Robin. You can go to Chicago Quant Technologies and see the phone number type of thing and talk to them and go from there. I try not to do more than say that type of stuff during the webinar because I try to focus in on the Dukascopy side of it all. And you could always do the execution through Dukascopy. And then follow our math and follow the J4X at the same time. And so that's usually the best way to describe it all in the end. that is usually the best way to describe it all in the end. Let's see. From there, what else can we say about any of that? Let's see. We'll find it in a second. I'm looking for something for you here. Where's trading at? Is it there? That can't be that. Man, look at all those things. Maybe it's in trading. Let's go to trading. I'm looking at the calendar. And charting. Why am I always having problems with this? All right, try this. This might help you also. Let's see. There we are. That might help you right there. Okay? All right. So from there, what else we got? There's a couple other strategies that can be done with the binaries and the spot. It depends. Like if you get into a daily sell and you see the J4X chart here, you get that hinky ASCII bar turning red. You get the red line turning down. Then you can feel much more comfortable trading the short side by doing simple things like putting binaries on or put spreads or selling the spot short and at the same time, or adding to it by selling a put short. So it's kind of like a combination. It all comes down to what they refer to as delta in the end result. and the risk combination. You didn't see that? What I put up there? You didn't see that right there? There we go. You'll be able to see it. That helps you out. Yeah, talk to Robin. He'll help you out. And then we can push the execution over to Dukascopy if you're using Dukascopy execution. All right. What else can we say about any of this? Where did we leave off? We went from... Oh, yen. We haven't seen the yen yet. Let's take a look at yen. Let's get it up on J4X. Yen has been fascinating, just like everybody else. You know, they're playing with 20-year highs, things like that. You know, obviously it's a combination of flight to safety and inflation. You know, it has to be a combination. That's the only way I can interpret it through fundamentals, at least in my head. And it's really always hard, you know. Oh, you're welcome. It's always hard to try to understand what the markets are trying to tell us. That's why we lean on quantitative concepts. You know, we use not fundamental analysis, but technical analysis, because the markets have gotten to a point now where if the Fed can't tell us what the fundamentals are, how in the world could we believe that we have any ability to understand how the fundamentals are going to move a market? And that is the problem. Obviously, is fun. And I know I've used that title before. Matter of fact, I want to use it again today. You know, if the Fed doesn't understand fundamentals, who can? You know, I mean, really, you know, the Fed and its fundamentals are so out of sync. You know, that now they've just joined in. It's like, welcome to the party, Fed. Thank you. All right. So there's the yen. You can see the pressure on the yen. You know, it's got a couple of red hinkies. You got the green line breaking down. And right there you can see, you know, it's doing its thing. You know, we're in the sell for 2 days. And it's trying to lift back up. Now, you can see we've been in a weekly. Let's just make that a little bit clearer, too. And where's that line? Went into the sell there. Like that. Move that over to there for the buy, which was a horrible buy. It actually lost money, which is, you know, fleeting at best, you know. We can't be right 100%. We're always 85% of the time right. That's fine enough for me. Good money management will keep you safe out of it all. Because imagine if you got long here, and if you didn't find a way to make a lot of money out of that, then oh dear. And so it kept you safe there. It finally pushed you into sell there. But in this case here, you can see this. That a lot of times is the kind of getting towards the end of the action. And I've said that too. I think the yen in many ways is a leader to us. Which title? Oh, you know what? Look up, Janos. Didn't I mention the Fed and fundamentals a long time ago because I was upset about that transitory stuff? That might have been 6-7 months ago. I'm thinking today... you know, something like fundamentals, Fed fundamentals are now in sync with the market. How do you like that title? Fed fundamentals are now in sync with the market. Too long? I can use it? All right, I'll try to tighten it up a little bit. Or Fed fundamentals... recognize the market? How about that? That's 4 words. Fed wakes up from coma. Yeah, really? Yeah, and who do I want to say is playing the part? Robin Williams. Robin Williams is playing the Fed chair. Yeah, really, isn't that the truth? Fed wakes up from coma. Fed fundamentals... recognizes market. How about that? Those 4 words. Fed fundamentals recognizes market. I think that's pretty good. But I like the better part. Robin Williams playing the Fed chair. Wouldn't that have been great? He could go into one of his comedy acts up on the on Fed Day, just being wild and woolly. That would be perfect. That would be perfect. I'm sure that's a sure on both, right? You do remember who, Nanu Nanu, the guy that used to go around doing that crazy Mork and Mindy show, and then he's a stand-up comedian back, and then unfortunately he committed suicide. He was sick or something like that. But Robin Williams, I think Good Will Hunting, he played the psychiatrist in that. Billy Crystal would have been pretty good too. So, all right, let's take a look at the Mexican peso and we'll get out of here. Let's see where the Mexican peso is. Right there on J4X. You can see 3-day. Look at that. That thing is coming down. Now look how smooth it's working in the J4X. Nice, huh? It is. It's punching down now. Let's just see where it's at right here. And I think it's heading for the bottom of the range, which that's what we suggested yesterday, just because of the way it's been acting on the quantitative side. Yeah, see that? It went into the sell here, and it's dropped down, and unfortunately the weekly is holding it up. That's the problem there. I wouldn't touch it without options or binaries. I recall those, but we are going off topic. Yes, indeed. You would rather see Fed wakes up from coma. And I would love to have that up there. But I think that may alienate some people. So, Fed fundamentals. How did I say it? Fed fundamentals reflects market. How about that? Reflects market. It should be 5 words. Finally reflects market. So it should be like Fed fundamentals finally reflects market. How's about that? That sounds good. But I do like the idea of Fed wakes up out of coma. The patient's going to live. Yeah, that's a goodie. That does. Let's use that as the title. I don't have to send that to you then. Perfect. But yeah, it is nice to see the Fed actually pay attention to the reality of it all now. Like I said, I was listening to Powell yesterday. I was really happy with everything he was saying. I was like, wow, where have you been? I didn't think about being in a coma, but yeah. It was like, welcome to the party. Finally, being the Fed chair. What a great idea, huh? Yep, Pablo, catch you tomorrow. Let's see, what else can we say about any of this other stuff? I guess that's about it, traders. All right, everybody have a safe and smart trading day. We will catch you all tomorrow. Tomorrow's TGIF, so thank goodness it'll be Friday. So happy trails to you from cattle country here in southern New Jersey. Until we meet again, happy trails to you, to all our trading friends. Later, traders. Have a safe and smart trading day.